It does feel like people are risk off at the moment, obviously. You've got this, on the one hand, dissonance in the fact that people want to play global reflation, small caps, international. And on the other hand, you're seeing just bond yields lower in terms of, I think, further fears of further concern around the AI trade within the U.S.
You're linking the AI trade dynamics over to price up, yield down.
You can't do it with the economic data, whether it be the surprise index at multi-month highs, whether it be the jobs data as of the last week or two. So you can't link it that way.
Dan, I mean, nobody does tech research better than the Morgan Stanley complex. You guys have been leaders on that for decades here. What do you guys make of this fade software, just broadly defined? I mean, software is a story that just works for everybody all the time. Now it's really under some risk here.
Sure, and thank you, Paul. Appreciate that kudos. So, number one, I think it's one of these many examples of dissonance at the moment. On the one hand, the market is fearful over AI spending. On the other hand, the market's saying software is going to be disrupted. So I can't explain that one in terms of efficacy versus disruption. And look, I would say not all software, not to be that completely out of consensus, but not all software is created equal. When I look at the varying types of software, some of these companies are actually partnered with the AI model makers today.
Right.
You know, it's funny, we were talking about software and just tech research, and you think Mary Meeker, she was in the news again this weekend, Mary Meeker. She won the AT&T Pebble Beach Pro-Am.
Wow.
No way.
No
way.
Way.
What did she do? Hand her PowerPoint?
I don't know
Her
what she
PowerPoint.
did. I saw her in the news.
Remember her PowerPoint?
Oh,
And
yeah.
you had to sit there in a bar with
150.
Alexis, you'd sit at a bar in Midtown Manhattan
Right.
with the beverages of your choice. Beverages. Because it'd be, what, Dan? It'd be 64 pages. And the problem with Mary, every page had value.
Yep, that was a problem.
You know, it
Good
was.
stuff.
64 was the intro.
Yes.
Yeah.
Yes, exactly. So what are we doing here? Broadly defined with equities here, 2025, excellent returns in the U.S., even better returns outside of the U.S. What's the setup here for 2026?
So number one, we're saying to stick with the international trade, right? So on the one hand, whereas the AI-centric optimism has now ceded to concern, that's obviously benefiting international, number one. Number two, you've got policy and fiscal tailwinds helping Japan, helping Latin America, helping arguably Europe in some degree with this defense spending and a revamping of the military-industrial complex there. Number two, we're telling folks don't abandon the large cap quality adopters in the U.S. I think the biggest dissonance I've observed over the last month, and we've known software is going to be disrupted for the last 2 years, so that's not the big surprise. It's that every other sector of the market has seemingly been taken out to the disruption woodshed. And a lot of these, by the way, were the names that were the biggest adopters of AI previously. That's the big dissonance.
Earnings were, 3/4 of the way through earnings. It seems pretty solid out there. Has earnings been solid enough for this market going forward?
Not at the moment.
Yeah.
I think the market is losing sight of, we talked about the macroeconomic data earlier, pretty solid in and above itself. And earnings is broadening out. I think the key trend at the moment is that you're seeing Russell 3000 median earnings growth of around 11%. And that's up from, call it, low single digits the last year or so.
I mean, I look at the Google bond deal the other day. Lisa Shallot loaded the boat for Morgan Stanley on a 100-year British piece. But I'm sitting there this week going, okay, Microsoft's in the tank, down a couple dollars this morning as well. It's closed at 401. It's trading now 399. Okay, Dan Skelly, fine. But can't they and others in one Bloomberg headline change the zeitgeist by saying we're going to do a ginormous bond deal off Dan Skelly's desk at Morgan Stanley?
Well, we'd welcome the partnership, no doubt. Listen, I think when you look at the majority of AI spend, it's still being funded from cash flow. On the margin, there is leverage coming into the system. But, Tom, as you know, many of the Mag 7 balance sheets are net cash balance sheets.
Cash positive.
They could afford to take on some leverage.
Am I right that they could do one? What do your tech people say? Can they do one tranche, two tranche, 30 billion here, 20 billion there, 16.5 billion
The demand is
there?
off the charts, as you know. And so, we think there's
Am I nuts, Paul?
No, I'm with you.
We think there's some room to take on some leverage here. But look, at the end of the day, we think the market is efficiently and probably rightfully taking a pause on Mag 7 at the moment and the S&P because we've had this massive spending ramp up. We have alternatives for the first time in a decade. We have other markets with momentum. And we all know what momentum as a factor has meant for equities over the last several years. It has truly taken the baton from valuation. And so at the moment, momentum matters.
So does that lean outside of the U.S. versus U.S. here? Because, I mean, when you look at the European markets, they've always traded at a discount to the U.S. because they don't have that tech exposure that we have. Is that now the time for them to shine as they did last year?
Yeah, it's a fabulous point, Paul. And number one, that's true. It's the absence of a negative at the moment. Number two, it's real fundamental catalysts. So whether it be defense we talked about, in a post-Ukraine recovery effort, we might see a Marshall Plan type equivalent rebuilding infrastructure out there. And number three, when I look at fiscal policy, right, we've talked a lot about the U.S. fiscal and political situation. Look at what's going on with Japan post the elections. We now have a supermajority.